Good evening, ladies and gentlemen. Today we're going to be talking about, is Powell going to bluff, or is it going to be a total sweep for the week? Are the bulls going to win? The bears going to win? What are the Fed members going to kind of say? What the message is going to be? And recapping the previous week, which was pretty volatile. And I don't expect the volatility to go any lower, especially with big tech earnings this week. As you can see here, just quickly recapping the S&P, we made a fresh new high, failed to hold it, and kind of closed low to the area of the week. Kind of not much of a big week. However, we did close above the previous week. Nasdaq, similar story, actually closing red on the week, however not falling below the previous week's range. So we're going to be talking about this and more, but first we need to recap the news for the week. So looking into Monday, we basically had Empire Safe Manufacturing Index came in better than expected, so market happy with that. Tuesday, we had core retail sales coming lower than expected, but retail sales more, so kind of a mixed messaging there. And then we had industrial production also coming in below expectation, so shrinking below trend growth, kind of in line with what Powell is expecting from the market. We had a Vice Chair Supervision Barr speaking, Gibson's, all these Fed members really didn't move the market in a meaningful way. Wednesday, we had mortgage refinance index and more markets along with building permits coming in below expectation. So slowing of the economy, as interest rates go higher, home builds and building permits are going to go down because people don't have as much disposable income to do stuff around the house. So it's in line again with what Powell is expecting, but does that sway him in a certain direction or not? And then Thursday, we got existing home sales. Again, similar trend to buildings. They kind of go hand in hand together, slowing the economy. Philly Fed Manufacturing Index basically came in slightly below expectations, and initial jobless claims came in basically below expectations as well. So that means that the jobs market is still raging hot, but you have a shrinking of productivity in the market. So companies are having to compete for labor, but they're not getting as much sales on the output. So they're having a higher cost in, but less output from manufacturing. So therefore, their balance sheets are hurting. If you're making less money but have to pay more money to make the product, obviously you're hurting. And we're starting to see that in the earnings season, where you're not seeing stellar guidance, you're not seeing stellar earnings. You're seeing basically like, hey, we beat earnings, but we beat it barely, and kind of like meh, so market falls. But then companies like banks that are basically saying like, yeah, there's disappointment ahead, and they're not even going down. It's just topsy-turvy land as usual. So existing home sales below expectations, as I mentioned. And here's the interesting thing. The CTF net speculative positions increased almost 50,000. So if we dive into this real quick, we clearly see the second cut per se. So again, I talked about this. I don't consider this the first cut. I'm using this as a reference. See, you initiate 1, 2, 3. Initiate 1, technically 2, and now 3. Are we going to get the third leg down before we get that massive cut to give us that bullish run? If you're a bull, that's what you want to see. You want to see these guys go down to 350, 300, 400,000 net speculative short, and then get clapped. That would give you confidence to actually go long in the market. Hey, new all-time highs are coming. That's when you really start to get believable, because the history tells us that that's going to happen. Is that going to happen? I don't know. We're going to talk about that in the key levels part of the video. Timestamp down below, all sections timestamp down below. If you guys want to skip to when we're just talking about what we think from the market, what we think of the Fed, what we think about earnings, that'll be also timestamped down in the description below. And basically that wraps it up for the recap, and Fatal's going to give you the biggest winners and losers.
So, earnings week has finally begun, and I gotta say, the markets have not really been doing much of anything. Here we have the S&P 500, guys. You can see on the 5-day, well, it only gained 0.61%. That's not a lot, if I do say so myself. And, as of Friday, they literally did nothing. It was flat as of Friday, so that's very, very interesting. Now, the earnings that we had for this week weren't the major ones, but we did have a few big ones, right? On top of the big banks, or at least some of the big banks in Bank of America, Morgan Stanley, that had earnings on Tuesday, as well as companies like Lockheed Martin, Prologis, and then, well, on Wednesday, we had Goldman Sachs, Tesla, Netflix. We got some very, very big names over here. On top of Capital One, right? Taiwan Semiconductors, Johnson & Johnson, American Express. So we did have a few decent amount of big companies here with earnings, yet for some reason the market really didn't do much of anything, as we just saw. Now, next week is going to be where big tech begins to report earnings, so that might be a completely different story. But for now, as you can see, the market really just didn't do much of anything on the 5-day. Essentially, I'm not going to say flat, but, pretty lackluster for being at an 80% fear to greed ratio. So with that said, let's take a look at the S&P 500 heat map to see what companies did the best and what companies did the worst. Starting with the technology sector, I don't really expect a lot of movement here up until next week. Nonetheless, though, we can see that it's actually... it's half and half, right? Half and half. Companies here were in the green, but a few of them were also in the red. Worst performer by the looks of it would be none other than the company, Applied Materials, losing 4 point... Actually, no, sorry. It was actually the company Monolithic Power Systems, losing 5.55%. And the best performer, it is the company, by the looks of it was actually really easy to tell, is the company Roper Technologies, gaining 4.55%. Looking now into the communication services. Guys, the two big ones over here, Google and Meta. Look at that loss. Google down 4.29% and Meta 4.73%. However, that is not the worst performer. The worst performer, it is none other than the company, the Interpublic Group of Companies. That's the name. Losing 16.4%, as well as Omnicom losing almost 13%. Best performer, it is the company Charter Communications, gaining a whopping 5.06%. Looking now into the consumer defensives. This is actually very easy to tell which is the worst performer here because it's bright red. It is the company Estee Lauder, losing 7.21%, and the best performer by the looks of it, it is the company, I think it is the company, STZ, gaining 5.5%. Overall though, very, very green sector. Only a few major red ones. Actually, no, there's actually 3 red ones, guys. Again, Estee Lauder was the worst one. Philip Morris, which was the second worst one, only lost 2%. And I believe this is Church & Dwight. Yes, it is. Lost 0.7%. Looking now into the healthcare. The healthcare is finally recovering from its downturn these past few weeks. As you can see, this is an emerald over here. My lord, the drug manufacturers, all of them were in the green, all except for Biogen, which lost 0.79. However, though, the worst performer by the looks of it would be none other than the company Align. I believe this company gained massively last week. In fact, you can pretty much just see it right there. Guys, it lost 8.04%, and the best performer would be none other than the company. Yeah, look at that. Wait. This is actually a little bit difficult to find over here. There's actually 2 which gained very, very similarly. We got Zoetis Inc. gained 6.57, as well as Agilent gaining the same, 6.57. Oh, actually, sorry. I'm so sorry. Over here, Waters Corporation gained 6.63, and I am messing all of this up. I'm just focusing down here. Guys, take a look at this. Elevance Health 8.5 and CNC 7.62, and even Molina Healthcare, I think that's how you say that, 6.67. So overall, my mistake, guys. Overall, the best performer, it is none other than the company Elevance Health, gaining 8.5%. Very, very massively green sector overall. Looking now into the financials, we just got the big banks, and guys, they really outperformed. They really much outperformed, especially JP Morgan and Bank of America. If you guys saw our live stream, which by the way, if you haven't checked that out, check it out. If not, I did release the videos when we did the discounted free cash flow, when we did the analysis on those earnings as a separate video with timestamps. All right, so it's a pretty long video, but it has timestamps, so you guys can look at it whenever you want and figure out the timestamps for yourselves. All right, so just, if you want to see that, make sure to check that out. But you can see here that the banks diversified all in the green with, Bank of America. Look at Bank of America, almost 10%. Not the best performer, though, on this whole entire sector. You can see, guys, this is just absolute insanity over here. Massively, massively green. And the best performer, I just saw over here Key Corp getting 12.5, but that's actually not the best performer. Let me actually just check this. Okay, yeah. The best performer, it is Charles Schwab. Remember when this thing was just crashing because of the regional banks? Yeah, it just gained 13.6%. Absolute insanity. And again, well, if you take a look at over here, Key Corp, 12.5. That's another notable one. Worst performer, though, DFS. Major, major scandal. We covered this a little bit during the live stream. Basically, they had issues with FDIC insurance, I believe, and it stemmed back to like 2007. So that's the reason why, as well as they also missed on earnings, if I'm not mistaken, or I think they missed on revenues. Either one of those. They missed, and they fell 11.34% on the 1 week. Absolute insanity. Looking now into the consumer cyclicals. Wow. I love how the big companies, pretty much in all of them, right? In all of them, the big major company, I wouldn't say all of them, but when it comes to the communications as well as technology and, well, the consumer cyclicals, you guys can see here that, yeah, the big name brands fell a significant amount. Now, the worst performer here would be, it's actually none of these, though I do have to mention Tesla lost 7.6, Ford lost 7, and GM lost 3.63. Now, the worst performer, though, by the looks of it, guys, would be the company Las Vegas Sands, losing 8.16%. And the best performer, by the looks of it, I like how you just have these two tiny ones here that gained, even though Amazon lost. Best performer, though, guys, would be the company Caesars Entertainment, gaining 9.6%. Looking now into the industrials, wow, very mixed sector, as you guys can see right over here. Green, red, not too massively in the green, not too massively in the red, though. By the looks of it, the worst performer, it is none other than the company. Wow, this is actually interesting. I thought it was going to be Axon Enterprises, but it's actually the company EFX, losing 10.22%. And, well, the best performer is very, very easy to tell, guys. It is the company JB Hunt Transport, 6.71%. But I also have to say, actually, no, sorry. Look at that. I am so sorry for that. No, it was United Airlines gaining 8%. JB Hunt gained 6.7%. And, of course, Deere & Company gained 5.38%. But again, United Airlines gained the most at a whopping 8%. The real estate sector right now isn't doing too hot. The REIT specialty, you can see it's definitely struggling. I mean, you got American Tower and CCI, which they're dealing in the same industry over here, lost a significant amount. Now, you can see here that actually that was the worst performer. Yeah, CCI lost 7.24%. Look at that share price though, $107. Guys, this might be one I keep buying because yeah, I do like my CCI. I really, really do. I might even begin a position as well on American Tower. Maybe not, since CCI already covers that, but still, you know, I'll consider it. We'll see what happens. Now, that was the worst performer. Best performer. Ooh, this one is a little bit difficult to find, not gonna lie. But by the looks of it, guys, it is the company Vici. Vici, I love Vici. Gained 4.06%. $32.79. Also, guys, realty income, fortunately, hopefully you capitalized when it fell sub 60. Currently at 3.17% up on the week, $62.75. Looking into the utilities, everything here is in the green. Oh, Lord. What? That's crazy. My God. I really wish the utilities were to come down. Again, though, this summer, you expect electricity to be off, like through the roof, right? And as well as water consumption as well. But yeah, worst performer here, or I guess the least green one, by the looks of it, it is the company NI Source. Never heard of this one. Only gaining 0.5%. The best performer, though, it is, yeah, it's actually this one. It's the company NRG Energy, gaining 4.8%. And looking now into the oil and gas, everything here, guys, is in the green, all except for one company. Worst performer, SLB, losing almost 2%. Best performer, though, by the looks of it, oh man, this is just absolute insanity over here. Absolute insanity. Best performer is the company Valero, gaining 8.38%. But also, take a look at this, guys. Devon Energy, 6.87. You got over here, what is this? MPC, 6.26. PCX, what is this? Phillips 66, 5.25. Pretty much if you were anywhere in this, all except for SLB, you gained a significant amount, which I'm happy for because, well, Chevron is my baby and gained 3.33%. And lastly, when it comes into the basic materials, we can see here that there's a few major red ones. Worst performer, it is the company ALB, losing 8.2%. And the best performer, by the looks of it, is the company, the Mosaic Company, gaining 7.89%. Overall, though, this was the S&P 500 heat map. It's interesting because, well, the market did end up slightly in the green, but you can see that that was mainly brought up by the financial sector as well as the healthcare sector and a little bit of the energy sector. But aside from that, everything just wasn't there. It really, really wasn't. So that pretty much is it for this section. Mike, take it away.
So guys, for the key levels on the market, it's pretty much going to be an interesting close week for us. So if we get rid of last week's levels, because we did close above the last week's high, so we are making higher highs, we failed to hold this wicking candle, and this is a classic definition of a hammer. So this means that there is a possible reversal coming in the market, and we're setting up with big tech FOMC this week, so anything is possible. Just because it's possible doesn't mean it has to happen. What does the market have to do in order to basically give us what we want? If you're looking for the bullish approach, you need to break above the 450 456.43 level. Once you break above that, hey, skies ahead, all-time highs, here we come probably, and we just continue pumping and flagging, pumping and flagging, pumping and flagging. What I mean by that is you can clearly see pump, flag out, pump. So are we going to see that here? Right now, we theoretically could be flagging out before the next pump, or we could be stagnating here because this is a bearish candle. And the simple way to break this candle would be to trade below the 450 level, or 499.08 to be exact. That is where I want to see support. We should not breach this level because the price action from that level to about the 443 is a pretty quick swan dive down, and that's where you get the proverbial stairs up, elevator down. Our 50-day moving average is sitting around the 427 area, 430, so we could get a retest if we get that elevator down, but it's really going to be dependent on what Powell has to say. Too long didn't reversion for anyone that's not going to really go to the debate section of the video to find out our deeper thoughts. I think Powell is going to spook the market because he's going to give you a different forecast for the future versus what the market is pricing in. We get more into detail on the debate section / talking part of the video, so timestamp down below if you guys want to see that. That'll be the first 5-10 minutes of the discussion that we're going to be talking about the Fed. But again, play the charts, not what you think. So right now we're in this no man's land, and I would be looking at the 451.37 level to be our pivoting point. You're above this, you stay bullish. So right now, if the market were to open and we were to continue higher, I'd be looking for the upside. If we break below that level, I gotta change my mentality and start looking for either we're gonna buy the dip at the 449 level and defend it, or we're gonna break it and I gotta go bearish. And then I'm gonna be bearish to at least the 443 level for the S&P. And depending on what day that happens, how it happens, I'm gonna be cautious with my positioning just because I have a lot of volatility in the market ahead. But that's the simple version of the S&P. And remember, we do have this nice trend line forming on the S&P that basically has been intact since this upper trend consolidation. So we're pretty far away from it. So I would like to see that 50-day moving average retested before I basically say, hey, go all in. If you get the 50 retest and you keep trending up higher, guess what? That's a nice bullish market, especially July being the most bullish month ever. There's nearly never been a red July in the S&P's history. So if we just jump over to the weekly, we have a lot of work to do if we're going to make this a red July. The candle open is 442.92, and basically this is the last week of the market. So we would need, from a monthly perspective, to decrease about 2% on the S&P. That is possible with Powell. We have the catalyst, but are we going to get that rip down? And the simple answer is going to be, do you basically go below the 449 level? If you do, you got no price structure like I mentioned in this area, and we could easily have a red July, basically cementing it in the history books as one of these events that has never really happened before. The market was stagnating, but they were defending that 450, 451 level on the way down. So this could be an A to B pattern on the way up, which for the bulls, if you're saying this is your A to B pattern on the way up, then I'm basically saying you're going to 470, which would pretty much bring you right to all-time highs or new all-time highs. Or if, let's say, this is a smaller A to B pattern, that brings you up to the 458.97 level, new high. So that's not something that's completely out of the ordinary. We definitely could do that, especially with the volume we have here. We're starting to ramp up a little bit in volume, so that's pretty good. But do we get the ramp down or the ramp up? That is yet to tell. Again, 451.36 is the level or pivot point that I say is where we need to start looking to see, are we going bullish? Are we going bearish? Now jumping over to the NASDAQ for its levels. So if we look at the weekly view on the NASDAQ, we can clearly see it broke below the previous week's high, but failed to hold it and actually closed below the last week's lows. So that's pretty bearish for tech, and that was pretty much led by Tesla and Netflix's earnings. Tesla and Netflix earnings, absolute crap, came down probably 10% each. For the NASDAQ, we're pretty much going to keep the same level for the upper end as an important level. It's not going to be your bullish swing. So again, that's your important level, and your levels for break up, break down. To the low side, you're pretty much very close to it. So the NASDAQ needs to go up immediately. It does not need to stag out here. And if it does, I'd be looking at one of these two trend lines to be your test. So again, these trend lines are from your recent uptick. So we have to see how that all plays out. And then the secondary line here is from your longer term uptrend. So you got two uptrends that are basically conjoining at the area now. And for the bullish break on the week, it's going to be a lot of work. You're going to pretty much have to have a 3.3% weak on the NASDAQ, which is pretty dang impressive, especially for tech after the miserable earnings that Tesla and Netflix had. So is Microsoft and Google able to hold up the market? That's going to be a question that we're going to find out during the week. And as simply as I can put it, if we look at this on a daily time frame, we're very close to this gap. And I did say, like I hinted in the live stream, that we probably come down to this gap and try to retest it. And the bulls actually made some progress on Thursday by defending it, and I was expecting the rotation up. I didn't get that. I got the rotation up, failed to hold, sell right back down. So again, this is not showing massive strength from the bulls. However, if we hypothetically say that this is going to be A to B pattern, B to C, the bulls will bring the NASDAQ close to that 400 number, and that would be a pretty awesome target for the NASDAQ. And I believe that would bring the NASDAQ to all-time highs. 404 would be all-time highs. So we'd be knocking on the door of all-time highs on the NASDAQ if that pattern were to complete, which pretty much, if it does complete, you're most likely going to get all-time highs. That would really mean that Powell would have to come out and basically say, hey, we're pausing permanently, no more rate hikes. I don't think he's going to tell you that. But that, again, that's just my opinion. I'm going to let the man speak for himself on Wednesday and basically come out and tell us what he's going to do. And everyone has their own hypothesis of it. Again, don't expect no rate hike this month. Pretty much that's dead set. The market's pricing that in. With that, guys, we're going to quickly recap the S&P and NASDAQ, and then we're going to jump over VIX, dollar, and yields, just talking about them real quick. So support for the NASDAQ, 375.19. Key pivot, 382.86, which would start this gap fill up here, and then break of 387.98 would be your breakout region. S&P more tighter range, 449.08 as the breakdown, pivot point 451.36, and then 456.93 on the S&P, and those are going to be your levels for this week. We're going to jump over the VIX real quick, and VIX pretty much just going sideways. It's just not really doing much of anything. As you can see here, we do have this trend line below. So again, this is why I'm not going super bearish on the market yet. So if VIX travels down to the 11s, it's pretty much going to be a nice push for the market. And again, VIX is going sideways. History tells us when VIX kind of goes sideways like this, we do tend to get a pop. And what I mean by a pop is if we go back to the COVID bounce, you were selling off, you went sideways for a quite extended period of time, almost like half a year, I would say, and then you got that nice rip up, COVID. But if you look here, selling down, stagnate, pop, selling down, stagnate, pop, and you find multiple examples, stagnate, pop. And these are nice 30 to $40 spikes, which again, for VIX is not unheard of. So do we get that this week or do we get it next week? And it's really going to depend on tech earnings. Right now, a lot of people are not buying protection, and it basically is stagnating around here. It's going down to 11s when the market is basically calm, cool, collecting new all-time bull market, nothing to worry about. I find it hard to believe that we're going to get that. Now, the dollar, everyone's been talking about the dollar. The dollar actually held the rotation off 101, and one of our viewers did comment that we're going to retest 101 and probably sell down. So, hey, honestly, this looks like a dead cat bounce. That's my take on it. Dead cat bounce, rotate down to the downside, A to B pattern to the downside, bringing in the dollar to 97.19, or I would say it will stop around this $98 range just because that's where it has this 200 weekly moving average. But the 97s is a area that previous top, so I could see that also happening. Dollar is just, not really strengthening here. It is strengthening going into Powell, but then again, it basically has just been weak sideways sliding all this time, and the Eurozone is going to be raising rates probably more aggressively in this upcoming period of time versus the dollar. So the DXY is weighted against the euro pretty heavily. So we have to see what it does. I don't suspect the dollar to make this new all-time high bull run type thing in the market unless something Powell says absolutely out of left field. I do think you're going to get, like we said, the 101 retest and basically head down lower. Right now, it's sitting right around that 102 or 101 area. So we have to see, do we get a nice little continuation? We are basically failing to breach this previous support right here. That's now resistance. So I lean more towards more downside on the dollar ahead. And last but not least, we're just going to quickly jump through the yields and jump over to the yield curve. 1 month strengthening into Powell. 3 month, again, just churning up as, expectations that Powell is going to raise rates or not raise rates is playing out, and stagnating around the 5.2% for the 6-month, along with the 1 year. So the bond market is basically saying no rate cuts for the next foreseeable future. And then the 2-year is saying, hey, we're going to get rate cuts maybe 2 years down the line, but not anything significantly. And if we jump over to my favorite thing about the yield curve, it is just stagnating here. So the question is, do we get a double inversion like we had here, or do we just break this and keep going higher? That would be a shock and awe. It would be the highest the yield curve has ever inverted after having a new all-time high is here, double topping at it. I do again think 6 months down the road from this double top, which would put us basically out into 2024, January, February. That's when you get the real carnage. That's when you get the waterfall. Do I think we're going to get any carnage between now and then? I don't know. I think you just get stagnant growth. And remember, we have Western Alliance reporting this week, so that's going to be a nice spicy thing to report. And Western Alliance is reporting, oh, so correction, we have PacWest. I apologize. We have PacWest reporting on Tuesday prior to the Fed's meeting. So let's see how that goes. It's been running up into earnings, and everyone knows my opinion of running up into earnings. Do you get a carnage split here? Looking like it wants to top out. So it's going to be a jam-packed week. And speaking of jam-packed weeks, let's dive over into the news for next week. So on Monday, we have S&P Global PMI, nothing really super there, but we global services PMI that may move the market slightly, but I don't think it will. I think that you're going to be waiting for that Tuesday, Wednesday's events of earnings and Powell to really move the market. We have consumer confidence coming in. They're expecting consumers to be more confident. I don't know where they're getting these numbers, but then again, that's what the market is saying, along with home price index year over year. Wednesday, we have new home sales along with the Fed FOMC statement. So new home sales and building permits are expected to come in. So new home sales expected to go down along with building permits. So kind of going in with the previous week's numbers of the housing market just kind of cooling down a little bit, but just maybe taking just a reprieve rather than a cool down. And we have the FOMC press conference where we'll hear what Powell has to say. Continuous jobless claims expected to come in lower than the previous week, so maybe they finally get it right this time. And we have core durable good orders expected to shrink now month over month, so stagnating growth. We have GDP coming in basically at 1.8% and previously too, so we got to see how this number comes out. Do we get Powell's comments of below trend growth, which the economy traditionally grows at around 2 to 3%. So are we going to see basically sub 1% growth anytime soon? Initial jobless claims expected to tick up from the previous number. Then again, they get this wrong so many times. I would not be expecting this to come in hot. I expect it to be subwhelming and come in maybe like 210, 200K. They're usually off by 20 to 30K on the low side. And then pending home sales, but really Powell is going to set the tone for the week with that. And Thursday, we got Meta earnings. So I think all this news just gets wiped out by whatever Meta says or does. And then PCE comes out Friday, which again, they're expecting a slight decrease in the growth rate from 0.3 to 0.2 on the month over month. And the year-over-year number is not yet published, was at 4.6. So if it doesn't come in sub 4, that's not going to be meaningful progress to the Fed. The month-over-month and the year-over-year for regular PC is not published yet. It came in 3.8 and 0.1 respectively last time. So we have to see what happens there. And with that, guys, we're going to dive over into the debate section of the video, so you guys can minimize the video or it'll be more of a talking head video. But we really appreciate you watching, and if you would not mind hitting the like button, it really helps with the YouTube algorithm. And without further ado, let's dive into it. So, good sir, the first elephant of the many in the room, what is the Fed going to do?
Oh, man. I say 25. I say 25 basis points. I think they realized that they didn't break it, right? The June pause happened. They realized, okay, we didn't break anything, right? Hands up, we didn't break anything. Okay, we could do another 25. Let's see. They might even pause for the next month and then do the same, like do the pause 25, pause 25, pause 25 from now on.
It's like that. It's like that meme where it's like the two buttons and the guy's sweating. And it's like they're hesitant to press 25, then they press it, and it's like, oh, okay, I didn't break anything.
Oh, that's exactly what you're talking about.
Oh, I didn't break anything again. It's like eventually that's gonna shock you, right? But it's like you don't know. And now everyone I think knows 25. If we go to the CME Fed Watch tool, it's pretty freaking obvious. It's pretty damn obvious. But the thing is, they vocalize that 25 very much. I think anyone saying they're not, like, if you got people, and you do have people out there saying, oh no, they're gonna not raise rates. Guys, they literally told you we're going to raise rates in the next meeting. Like there's not a single Fed member that said it's not appropriate. They've given no indication whatsoever that they're even considering pausing at the next meeting. Not the rest of the year, but the next meeting. Which is a perfect segue into what do you think that the rest of the year is going to hold? Because right now, if this thing would cooperate with me, you have them staying at that rate. Nearly 24% of market participants believe that they'll hike one more time, 63, meaning the majority. And then you have the idiots that are at 9%, and I call them idiots because, well, the Fed literally told you no rate cuts for another 2 years. But I digress.
So the current one is what, the 9.1%?
Yes,
I can't really see
but that
it.
is, but yeah. So the 9.1% is where you're currently at
okay.
50. 525 to 550 would be after they raise in the next meeting. So a lot of market participants are, they're wanting to say that it's 63.6% chance of one rate hike, which is the July rate hike. And basically, that at that point, they're done. They're done for the year. The official pause starts.
I don't believe so. Again, I don't believe so. I think that they might do that on and off. I think so because it's almost like, how can I say this? We almost realized that was exactly what they're going to do, right? They started with 75, then they went to 50 for a while, then they went to 25. So the logical thing, they're not going to do 10. So the most logical thing would be something along the lines of like, 25, pause, 25, pause, 25, pause. Just so that way to see if they're going to break anything.
Which makes sense because you know how Powell always goes...
It's logical.
Yeah.
It's the logical next step.
But Powell always talks about Volcker, right? Volcker, 1970s. What did Volcker do? He just pounded it to the wall, then went right back down, then pounded it to the wall. Yep. So if you think about the psychology for Powell, which remember, Powell sways the Fed members a lot. He has a lot of pull. Him and Williams basically run the show. They run roughshod over everybody. Mm-hmm. And no one's, quote unquote, going to deviate from Powell's master plan. If you do, you're basically going to get pulled to the corner and bad boy. And literally, with the market as a whole, they're not expecting that, right? They're not expecting the Fed to do something different than history because their mindset has always been hike, pause, cut. Never in history have we had hike, pause, hike, pause, hike, pause, which the question is, you're just going to have that. Like, you're pricing it in. The market is pricing that in, but yet you can't price in another pause, hike, pause, hike. Like, he's hinted at 3 more rate hikes. He's told you 2 is like a guarantee, but yet
this year. Yeah. No, I agree. And the sad part about this is, and I can't believe I'm about to say this, I don't like the guy. I don't like the Fed. I don't like them at all. But honestly, that's like the best course of action. Like, out of all the things they could do, I actually, I want to say agree with it, but I actually understand as to why they're doing that.
It's like picking between shoot me in the foot, shoot me in the leg, shoot me in the arm.
Right.
It's still a bad choice because it's still their fault that we have this inflation. But
they shouldn't exist to begin with.
Yeah, but putting that aside on the table, this is the quote-unquote best way to get the proverbial soft landing that me and you don't believe is coming. I believe you're going to freaking hit the bedrock harder than a tennis ball on a court. But to not break something immedately, this is how you do it. This is how you kind of let the damage not be, let's say, as severe on the after effect. I think he knows they're screwed because history tells them they're screwed. But they understand that, okay, if we keep hiking hard and then something breaks, we still have to deal with all the consequences of our hikes that were aggressive versus we have like the base hikes, which was the 75, the 50, the 25s. And then we're just tacking on little bits of damage where it's the end result is not as bad per se. If they were to go 50, 50, 50, 50, just keep going 50s till they broke something.
Also, understand that we have no idea what their definition of a soft landing actually is. I know they've said it several times, but a soft landing could be a simple, the market falls or the economy slows down 30%. Is that a soft landing? I don't know.
They actually have never, now that you bring it up, they've never actually defined it.
They have not. They defined it, but it's never been like a hard number. You get me? Like, okay, what is a soft landing? How much down should, or how slow should the economy be for that considers it be a soft landing? 5? Like, should GDP be -5? Should the stock market fall 10%? What is a soft landing? Because for all we know, everything could just fall apart. Again, speculation here. Everything could just fall apart. Everything is down like close to that of 2007, and they could come out and say this was the soft landing, right?
Yeah, and hindsight's always going to tell you that, but
right. But you see my point though, is we have no idea what an actual soft landing is, at least from a quantitative perspective. You get me?
Because you could say a hard landing per se is like a Great Depression followed by a lost century or a lost decade. Like, you know, that could be your hard landing, and your soft landing is a V/consolidation. Like, you drop 50%, you consolidate, and then the economy starts to recover back. Similar to like 2008.
Here's a question. Do you consider the 2020 crash a hard or soft landing?
I don't even consider that a dang landing. That was just a minor correction dip.
Well, right. But my point is the way that they handled it, slashing interest rates to near zero. You get me? Was that a soft landing or was that a hard landing, right? I don't know. So we have no example throughout history as to what they actually mean by soft landing. At least that I'm aware of. Maybe we have one, but from what I'm aware of, I don't know it.
I don't think there's ever been a soft landing per se. Every single like significant market correction or recession, or again, yield curve inverted like no tomorrow, and all of it points to a pretty significant downturn. But I think in their minds, they may have it skewed of, and like how you're hinting at, what is the aftermath looking like? Like, you have whatever downturn, but what is your aftermath? Do you basically kind of just have this 6 months of pain and then everything starts going back to normal? Or do you have this proverbial, because I don't think they want like a lost decade type thing. I think they will ultimately be forced to return to basically 2020 levels of QE, printing money. And I say that, and then it pops into my brain. We've also said the same thing about everything they else did, and they're not doing it. So do they basically flip the script completely and say, okay, market crash, okay, here's your lower interest rate to maybe like 1%. You're not getting 0. And
except remember that they want a market crash. They want to, especially the labor market, right? They want to crash the labor market. In fact, I believe when we saw the earnings, sorry, not the earnings. I have earnings in my head. When we saw the jobs numbers, we got a comment. I think it was on the live stream that I did by myself. We got a comment saying that it's going to stay high. Inflation will remain high because wages haven't fallen.
Yeah, if you look
wages
at
is the main driver.
Average hourly earnings, they're like 4%. So if you're saying inflation defined by the market, which is CPI, which is not the correct definition in my opinion.
It's not,
but it's wages are growing higher than inflation, so inflation can't go back down. Inflation's going to dip and then come right back to ripping your face off on CPI, because one, everyone has short-term memory disorder. They forgot what it's weighted against, which is the highest oil prices in a very long time.
By the way, speaking about that, have you seen oil? Have oil prices been shooting up?
Yeah, we're almost at we're at $76 a barrel right now, and we were down in the 60s about 2 weeks ago. So
well, no, I meant like at your gas stations.
Yeah, because it went up 30 cents.
At 375. Yep. Yeah, here I just saw it at 375. I'm like, what? When did that go up?
Yeah, but
it was 350 like a few days ago.
Which, if you look at oil as a metric of growth in the economy, that is a positive, but it also has factors of the cartel is basically saying we will not let oil below 60. They're hell bent on a $70 to $80 barrel crude globally. Yep. They have 80% of the production means. So they run the market. You're subject to them. They can close the spigot completely and really starve because you have a set demand. They almost
have. Saudi Arabia. No, Saudi Arabia. A few weeks ago, they said we are going to cut off. We're going to stop the oil production. We're not going to increase that anymore.
Yeah.
Remember, we saw that.
They're not going to increase their output, but they're now.
That's what I mean.
Now they're in
Yeah,
discussions
that's
of
what I mean.
cutting output, meaning they're
Right.
going to go. You have a set demand of. Let's use an arbitrary number. Let's say it's 1 million barrels of crude a day. It's an arbitrary number. I don't actually know what it is. And that's your set demand, and you're producing 1.2 million barrels of crude. So what happens when they go and they start making it like 1 million, equaling demand, and then 950,000 barrels a day? And now that same amount of demand is competing for less oil that's there, bidding up the price. And all they got to do is keep it at demand or slightly below. And you see, supply and demand economics will keep oil prices synthetically high, even though you have a downturn possibly in growth worldwide. Looking at Germany, looking at the Eurozone in a recession. And about jobless numbers, initial jobless claims, everyone cheered. Oh, they're going up, And what did we say? We said they're going to come right back down, because every time this has happened in history in the last couple months, you get a spike and then it comes right back down and beats the numbers every single time. What's happened the last 2 times it got printed? Beats numbers by 20, 30K each time. The job market has little to no being affected by the Fed. Like, the Fed has said, okay, we've shot you 7 times, but you're still standing, charging us like a juggernaut.
So I wasn't aware that the initial jobless claims came out on the 20th.
They come out every week. They have the weekly initial and the rolling 4 weeks, so you can see like the progress of like what is the 4 weeks average and stuff. It's always better than expected. It's always showing a stronger jobs market. The Fed has not crushed the jobs market. Right. And the question is, you have 500 basis points of hikes, and the job market is like the penguins of Madagascar. Smile and wave, boys. Smile and wave. Like,
That's a meme I didn't think you were going to go there. All right.
Hey, but it's literally it's a juggernaut. It doesn't want to flinch even. Whatever they do, and the thing is, people are saying they're going to cut. The Fed's looking at this, and then they're looking at, if we quickly just segue to PCE, which comes out Friday.
Is it Friday?
So you get the Fed, you get Apple, you get Microsoft and Google earnings, you get GDP Thursday. It's like, do you want
this week?
I said I wasn't going to trade this week, or this week being this previous week, I didn't want to trade because of earnings. Yeah. And I'm like, I don't want to even touch next week, because I'm like, the amount of volatility is going to be 5% up, 5% down, 5% up, 5%. It's just going to be, you're going to see these rips in the market that are just going to be insane. But
yeah, man, this week is crazy. I was looking at the options chains ending in July 28th, and I kid you not, like the premiums for puts, it's through the roof. It's like off the charts. But yet, when you look at like not next week, but the following week, they actually just crash them. Like, they just crash. Like,
because
at least when it comes to the premiums, it's ridiculous. I'm like, wow. Because you have you have PCE,
the Fed.
You have the Fed's FOMC meeting, and you have a crap ton of earnings.
Especially big tech.
Well, a few of the big techs.
Yeah.
We're going to bring that up in just 1 second, but what do you got here?
So this is what everyone has to keep in mind. This is the PCE year-over-year core. Have you seen any progress of getting this to 2%? Does this look like progress?
Stagnating. Yeah, it's stagnating at around like the 4.5 part.
Until this thing looks like CPI, the Fed is going to keep raising rates in the manner that I think that we discussed earlier. Pause, hike.
Yeah.
Meaning they're going to bleed you dry slowly and painfully. But yet, the market just wants to keep shooting up, and I'm like, okay.
Well, hang on. I'm going to have to fight you a little bit on that one, because the market this week was up, but it was only up 0.6.
For the week, yes. But also I'm seeing more of this like euphoric nature in the market, where everyone's like, buy the dip no matter what.
Yes.
And I'm like reminiscing of this. I'm like, if anyone's ever seen The Big Short, this happens right before the catastrophe. And if you look at card services like Discover, Amex, American Express came out and basically said that if you look at their earnings, they're putting more cash on the side. Why would a card servicer be putting more cash on the side? Is because they expect you to default. They are expecting their cardholders to default, leave them holding the bag, and therefore they need liquidity to pay that off. If everything was good, if everything was hunky-dory like these bulls say in the economy, again, stock market and economy, two different things. But they eventually catch up to one another. You can only stretch that rubber band so far before it snaps back.
Yeah.
Again, if everyone starts defaulting, if debt goes through the roof, student loan repayments, we're gonna bring that up every opportunity we can, because in September you already what Amex probably sees it. Okay, so these people that are barely paying their balances now have to pay $500 a month in student loan payments. Where are they going to get the money?
And by the way, from what I've seen, we're the only channel talking about this on a pretty much daily basis.
Because
nobody's talking about it.
It's the same
Nobody
way
cares.
The same way like Burry was talking about the MBS. That it's a gigantic bomb waiting to go off. And here's the thing, even if it's not a bomb, let's bring it down to like the best case scenario. It's going to stagnate and pull money out of the economy. Estimated $45 billion per quarter is what some banks are estimating that student loan repayments will pull out of the economy. Go tell one of these big tech giants, hey, your revenue is going to be gone by $45 billion. They're literally going to look at you and be like, what? And
here's the thing also. Oh wait, I'm going to have to preface that with something. We could absolutely be wrong, by the way, right? Because I mean, when the whole housing thing was happening with what was it with the what's the thing called
forbearance
with the mortgage forbearance and the renting forbearance, we were saying, oh, it's going to fall, right? It's going to fall as soon as forbearance ends. It's over, and it never happened. It happened, but it didn't happen to the extent that we thought were going to happen. So preface that with, we believe that, you know,
it's a theory.
It's going to cause that, right? And I would say even hypothesis. I would even go, a little bit further back than just a theory. But yeah, our hypothesis is just, I mean, student loan guys, people, when they said you don't have to pay it anymore, what did people do? They didn't. Well, not all of them, right? Because we know a few that, for example, Sticks, he paid off all of his student loans. Most people didn't do that though. Most people said, I got $500 extra. I can afford $500 more in mortgages. Interest rates are all-time low. We probably don't have to pay mortgages again. They were betting on the government actually bailing them out. Didn't happen. So, yeah, I mean, it's just, I don't know, man.
And I know a couple people that have bought into the delusion of the government gonna come, daddy government gonna come save you.
Yeah.
Whatever your political persuasion is, please look at or name one time in history the government has actually come and saved you. And there is also the famous quote when they say, I'm from the government, I'm here to help.
I'm here to help.
You should run.
Run away. Run away. So if anybody else says, I'm from the government, I'm here to help, run away. Yeah. Run away. So, no, absolutely not.
But going into the next gigantic elephant in the room, which is earnings. So
we're now into a blue whale, actually.
Yeah, blue whale.
We're into blue whale.
We're in blue whale. So Monday we got not so much. You got Philips, Logitech, Whirlpool. So that'll be
Domino's. Excuse you.
Okay.
Excuse you. No, but seriously, earnings week, guys, is in full effect, and this week is going to be. This week is crazy. Tuesday's the big one, though.
Oh, yeah. Microsoft, Apple, Visa, 3M, GM, Verizon, Spotify. It's Google. Like it's gonna be absolutely crazy to see
Texas Instruments, Next Era Energy. Yeah, guys.
Raytheon.
We plan to cover, hopefully, Mike.
Yeah.
We plan to cover on a 100% basis Microsoft and Google. All right. So if you guys would like to see us cover anything else, please leave it in the comment section below. Just FYI, for Tuesday, we plan to cover 100% Microsoft and Google. For Wednesday, we want to cover Meta and what? Coca-Cola?
Yeah, that'll be a good one. Coca-Cola has traded its own little range, so it's gonna be interesting to see what it does.
Coca-Cola has just not fallen at all. It stays at the $60 mark for months on end.
It's just it's a company that's like, I don't care if you have a recession, I don't care if you have bull run, I don't care if you have depression, I don't care if you have all-time highs. I'm like, I do my own thing. Screw all of you.
Yep. So Tuesday, Microsoft, Google. Wednesday, Facebook, Meta, and Coca-Cola. For Thursday, what? McDonald's and Crocs. I have to cover Crocs.
I think we got to cover Crocs. I think we got to cover McDonald's, and I really want to do Intel because, you know, Intel being the ugly duckling in the room. But
just pull that up. All right.
Yeah. Hey, guys, gotta have some comedy.
What is he doing? All right. So Thursday we're gonna cover Crocs, obviously McDonald's and Intel. Probably not gonna be able to do another one for Thursday. Of course, that depends. And for Friday, Chevron, obviously.
Your baby.
ExxonMobil.
Yep.
What's that?
Your baby. The Chevron, Exxon, and P&G. I think that those three are basically the three that we gotta hit up.
Yeah. Just the first three on that one. But if you guys have any other recommendations, especially for Monday and Tuesday, you know, and also Thursday and Wednesday as well, please leave it in the comment section below. Not so much for Thursday and Friday because we already got 3 for those days. So yeah, but earnings week is going to be crazy. And I'm going to tell you this right now. I have no options opened expiring for Friday, for the 28th. I am not doing any more options because I'm looking at this and I'm just like, And on top of that, you have FOMC. And on top of that, you have PCE on Friday. No, I'm good. I'm good.
And let's throw one more into the mix. You have preliminary GDP for Q2.
Oh, dear Lord.
So let's see. They're expecting, so last time it came in at 2%. Let's see, they're expecting 1.8. Again, trending down GDP. Let's see if that last number, because it was right around a key part of where the market ran up.
And that's on Thursday.
Yep. So it's just like pick your bullet. Which one you want to get shot with?
So FOMC is when?
Wednesday.
What date?
Wednesday. Wednesday.
So that is the 26th. So guys, keep this on your calendar. The 26th. The 27th we have GDP, and the 28th we have PCE. And then all throughout the entire week, a bunch of earnings.
Yep.
Important earnings too. Oh boy.
And, oh boy. And like we covered in the news section of the video, core PCE is expected to only go down 0.1% on a month-to-month. So take your progress and then throw it out the window, and Powell's going to say there's no progress.
And the year-over-year still hasn't done anything, right?
They haven't actually. They reasonably, they'll send it Monday or Tuesday. That's usually when they'll put it out. Or sometimes they don't do it to the next day. But again, we'll have to see.
All right. And one last thing before we end off, guys. Mike, Fear and Greed, please.
Yep. Cracking right at 82. There's no fear in this market. That's why the cuts in the market that you saw are so violent, because it's the staircase up, the elevator down. And here's the thing, you actually haven't seen a really good elevator down. You're setting yourself up for a nasty one, because all Powell has to do is break your understanding that there's going to be more rate hikes than this one. That's all he has to do. So I don't believe he's going to come out and be this hunky-dory happy Powell, because if they don't and PCE starts ticking up, they lose their credibility. Again, you got to factor in how credible they're going to be and how that affects their credibility, because if they lose their credibility, they lose all control, and then bad things really start to happen. So that's what's going to happen this week. Make sure you have a lot of coffee, because we're probably going to have maybe 3 hours of sleep per night. Yeah. Well, I'm already a coffee addict, so, you know.
I mean, me too, but I'm not really addicted, though. So, you know, coffee doesn't affect me. So, yeah. Guys, this week, get ready. We're going to live stream 100%, okay? It's not going to be late this time. And even if Mike can't join for whatever reason, I'll do it by myself. Mike, if you are, like, running late, join halfway through. Yeah, join halfway through. I really don't care. Even if you call me in the car, like while you're driving to your house, I don't care.
That works.
Right? Yeah, like I'll tell you what's gonna happen, like what's happening.
No, I'll try to make sure I'm on time this week for you guys.
All right. So, yeah, I don't have anything major going on this week either, so I should be good too. And this is going to be crazy. What do you think? How do you think we're gonna end the week?
Well, I think you're gonna have, well, it's hard to tell, because I can say that the market participants are going to get a sledgehammer to the face on Wednesday and possibly on Tuesday going into the Fed. But then again, they could just take a whiff of hopium and, you know, market goes straight up, because the market only goes up.
And you also have to take into account if earnings. How are earnings going to be like? I don't know. We have no clue. So, guys, absolutely insane week. Let's make this week an amazing time for the channel. Let's make this week like the all-time highs when it comes to the channel, when it comes to viewership, when it comes to interaction. All right, so again, 6:30 p.m. Eastern Standard Time. We're going to be here pretty much every single day, including Monday. We want to cover dominoes as well as maybe one other one, maybe Whirlpool, since I know you love them. We're going to cover as many earnings as we can, and let's just make all new records for the channel this week. All right, so with that said, peace out, and we'll see you all. Well, make sure you like, subscribe, comment. It really does help here on YouTube. So with that said, peace out, and we'll see you all next time.